Is no longer just a retail game. It's a full-blown institutional land grab. Public companies and other institutions bought over 131,000 Bitcoin in Q2 of 2025. That's the equivalent of 3 times the newly mined supply every single day. Public company stacks alone now represent a staggering $94.1 billion. Currently, 171 public companies and other institutions now hold Bitcoin. MicroStrategy, one of the leaders of the pack, obviously, with 597,000 Bitcoin. And they just announced another $4.2 billion offering to stack even more. MetaPlanet has become Asia's MicroStrategy, now holding over 15,000, actually 15,500 Bitcoin after a recent 2,200 Bitcoin buy. And even Semler Scientific, a biotech firm, just increased their stack to over 4,600 Bitcoin. And that's just what's public. Behind the scenes, capital allocators, hedge funds, and other companies are quietly buying at levels we've never seen before. Sounds bullish, right? Well, maybe, because there is an uncomfortable truth. Not every company is MicroStrategy. Saylor has cash flow. He's been through a bear market. But what happens when debt-laden companies treading water ape into Bitcoin just to juice their stock price right before the market turns? What if we were to get another 80% washout? Do these players hold strong, or are they forced to dump and cascade us into another liquidation spiral? And here's the kicker: despite this unprecedented amount of buying, the price has been decidedly sideways, barring today's little bump. So could we be witnessing the silent weight of paper Bitcoin? Are ETFs, derivatives, and synthetic exposure diluting the real signal? Or is today's little uptick the first sign that this institutional buying is finally exerting enough pressure to send us upwards? What does the Bitcoin treasury boom, from the hype to the hidden risks, really mean for this and subsequent cycles? So, gents, I mean, you heard my little rant off the top. It seems to be the cycle of Bitcoin treasury company. And Neil, you're literally writing the book on this. Matthew, I saw you drop some videos recently on Bitcoin treasury companies with a nuanced take on it. Larry, I'm sure you've got thoughts in and around this. So my general question to you guys is, where do you sit on this massive trend of, we love Bitcoin, buy our stock? Is this okay? Is this okay for now? Is this a problem that is brewing? Where do you sit?
Well, I would say that there are risks that people aren't aware of. And there's certainly a lot of passion in the space as well. If you say anything negative about them, you get, I'm not sure if they're bots or AI agents or real people.
But maybe that's why we got taken offline here. I don't know.
Yeah, exactly. But I think one of the risks that I think it's risky for people who don't have a TradFi background and may not be aware of all the intricacies when it comes to capital structure, when it comes to the order in case there's a liquidation. And people are aware of the problems with debt. But one thing I highlighted in a recent video is that there can be a problem for a company that is unable to issue debt and tap the credit markets if they're small or micro or medium-sized market cap. This wouldn't really apply to MicroStrategy, but you could be subject to, the Bitcoin treasury company could be subject to a speculative attack or some sort of hedge fund attack, where they're doing basically what Chanos is doing. Jim Chanos is doing a MicroStrategy right now. They go short the common stock. They go long Bitcoin. They bet on MNAV compression. And if they're able to ever get that MNAV down to 1 or even below 1, and the market and that company doesn't have access to credit markets to borrow money to try to buy more Bitcoin or buy back their stock, they could be in this sort of dead zone where they're just hovering 1-to-1, just backed by their Bitcoin, and people will lose interest because they're no longer getting the leverage. Like, why hold one of these if you might as well hold the ETF at that point, and you're not subject to operational and counterparty risk. So I think there are a lot of intricacies, and I worry that people aren't familiar with all the things that can go wrong with publicly traded companies.
Larry, do you want to tab in here as
Good
well?
points. I mean, yeah, I would just make the following comment. I've had a lot of investors and friends ask me about these things, and I strongly believe that the core of everybody's Bitcoin investment strategy should be coins where you hold them yourself in cold storage. And, this is the best performing asset in the history of the world. It's going to continue to be that. And, I kind of say to people, start there. You need to have cold storage coins, full stop. I think I saw somebody on Twitter recently, a young fellow posted that he had sold all his coins. He was using it to buy Metaplanet. And I thought, oh, I hit my head. I was like, no, 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 no. That's not what you're supposed to do. And that's not a knock on Metaplanet, by the way. It's just an observation about the nature of this asset. It's very volatile, and it's going to perform extremely well. So when you decide you want to perform even better than this asset, fine, but understand that doing so involves risk, and these companies have risk attached. There's several risks. One, there's the management risk. I mean, who's to say the management teams aren't going to get greedy and pay themselves big salaries, particularly if they have control positions or they own all the voting stock. I mean, we've seen that in the minors, guys like Fred Thiel paying themselves 40 million bucks a year. And, there's obviously all the other capital market risks associated with taking on leverage. And, leverage kills. I mean, it can enhance returns, but it can also crush you. And so, my overall view is, look, anything that supports Bitcoin and leads to more Bitcoin adoption and Bitcoin usage and Bitcoin accumulation, that's generally speaking good, particularly if it goes into strong hands. What I wonder is at the margin if some of these companies will be strong hands or they'll be weak hands. And the reason I say that, as you alluded to in your prelude, Ben, was just that if they get too levered up, they have too large a commitment in terms of debt or dividend payments, and the price swoons, then they're going to have to sell Bitcoin to make their commitments. So that's obviously the risk. And some of the MNAV multiples are quite high. I tend to believe that the MNAV multiples will kind of collapse towards Saylor's MNAV multiple of somewhere between 1.5 and 2.5. I mean, what Saylor's done is brilliant. And, he's figured out a way to let pools of capital that can't directly own Bitcoin, participate in the sense that, they might get a nice dividend yield or convert yield, with upside. And so, to me, that's great. We're demonetizing all these other financial assets, and that's a good thing. But as with anything else, there will be excesses, and we haven't been through a full cycle. And so I just caution people, with respect to that issue. I think that's what Matt, kind of alluded to as well.
Let me break this down for my fellow Bitcoiners. In just 8 weeks, I've seen a serious shift. More strength, more energy, and fast muscle gains. The reason? FITSCRIPT. They ran 124 biomarkers, blood, hormones, inflammation, and built a fully custom plan: nutrition, training, supplements. No guesswork, no templates. This is functional medicine meets precision fitness for high-performing men who want sovereignty over their health. If you care about optimization the way you care about your money, test, don't guess. Don't trust, verify. Hit the link in the description or scan the QR code on the screen to check out FITSCRIPT and see what's possible. Yeah, I'd echo that, especially the point of somebody selling coins to exclusively hold Bitcoin treasury companies. I feel like that's completely missing the point. I was actually, I was tagged in a tweet earlier today, and this is again, Jeff Walton. He talks a lot about MicroStrategy, but he's saying that Bitcoin and cold storage should always be step number one.
Right.
And there, again, somebody here asking, hey, I've been in TradFi banking 20 years, recently got orange pilled. Why would I need to have one Bitcoin in cold storage first if MicroStrategy is 2x BTC? Help me understand. And somebody got tagged, and I mean, the main point is that Bitcoin itself is the thing. Whereas when you're buying, a treasury company stock, you're trying to get exposure to the thing through the counterparty risk of the promises of the company, right? Like and so like I feel like if somebody wants to go and speculate on those things, it's a free market. You can absolutely go and do that, but you should have some Bitcoin. You should have, and I would say that your allocation to Bitcoin should definitely be larger than your allocation to treasury companies. I think people discount the importance of good self custody way too much. And again, like if I mean, you're at the place, if you're watching right now and you're like, I only own treasury companies and I don't own any Bitcoin myself, please fix that. Please learn how to get some Bitcoin, get it into self custody, get it into a hardware wallet like a cold card or something like that, and just begin that journey, because that's how you actually truly protect yourself and become self-sovereign. It's important, and there's lots of resources for that. There you go. There's a QR code, and you can scan that, and there's literally a single page of every resource that you need for free to learn how to self-custody. So go do that if you have not already. Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions.